Hey, it's Evan Carmichael, and like Robert Breedlove says,
Bitcoin flips the whole thing on its head and says, no, we should have a firmly fixed money supply that is a sound power reservoir for the energy that we sacrifice, the time and energy we sacrifice to obtain money.
So let's help you understand Bitcoin with Robert Breedlove and my take on his top 10 rules for success. Need motivation?
Watch a top 10 with Believe Nation.
Okay, let's kick it off with rule number 1. Become an asset holder.
The US dollar is a one node database. It's on an SQL server at the Federal Reserve. So it's the list of who owns what dollars. And there's one group of individuals that update it for everyone else arbitrarily. And to your earlier point about inflation, I think it's best to think about this as like a cap table, right? When you own a business and you have shares in a business that you're buying and selling, you wouldn't arbitrarily give one group the ability to just issue new shares whenever they want and dilute everyone else. That would clearly be asymmetric and unfair to the shareholders. Yeah, that's exactly the model we have in money. Exactly. Right. That you can think, it's another way to think about money, maybe, is it's a share in the capital stock of the world, right? My share of the US dollar supply gives me a fraction of whatever US dollars can buy. If money is a reflection of the total capital pool or the total savings, that's what it effectively represents in its purchasing power. But when one group can just twist the rules to favor themselves and disfavor everyone else, you have a disequilibrated structure or an asymmetric monopolized structure. So hopefully that explains inflation and property a little bit.
Do you intend that ill intent is afoot?
I would say it's more the arbitrariness, right? I don't necessarily want to dig into the intent so much as mechanically what happens. It's an arbitrary redistribution of wealth or property from one group to another. So they're diluting the property rights of dollar holders. Anyone depending on the dollar to store its value is being victimized. And those getting access to the freshly produced or printed money first are the victimizers. They're the ones actually extracting wealth from that group. And this is especially abhorrent because if you think who depends on the dollar to store its value the most, the poor. Those living on fixed income, pensioners, retirees, right? People living paycheck to paycheck. These are the people being stolen from. So I'm not going to make a claim about intent. There's a lot of arguments about, oh no, central banking, they don't mean to be doing what they're doing. They think they're doing what's in everyone's best interest. Fine, I'll accept the argument. But mechanically, those depending on the dollar are being robbed by central banks and those that receive the newly printed money first.
And who receives the newly printed money and how is that decided? And printed again is by changing numbers in a database.
Yes. So a lot of the beneficiaries are asset holders, right?
Name some assets.
Real estate, stocks.
So I own both of those. How do I benefit? Because I'm terrified of inflation.
Right.
So why am I not excited?
Because when money, the store value function of money is compromised, which is what's happening when we inflict inflation, that the dollar's not holding its value over time. Market actors are smart, right? They're going to move into a reliably scarce asset. The most predominant store value in the world today are stocks, frankly. So stocks, real estate, all these things that are reliably scarce in an inflationary environment become store value assets. So people that hold those assets as a larger percentage of their total net worth will benefit at the expense of those relying on dollars to hold their value.
Rule number 2, get assets with fixed supply.
Couldn't somebody just create their own Bitcoin and their own network and just blow Bitcoin out of the water?
So this is a nuanced answer to the question. It's not a straightforward question to answer because many people think, oh, iPhone disrupted BlackBerry, Facebook disrupted MySpace, something can disrupt Bitcoin. The first answer would be money itself. Why is money as a network valued? And it turns out that there are properties to money: divisibility, durability, recognizability, portability, scarcity. And then the network that gets built up around that is valued based on how liquid it is and what the network effects are. So how many people you can exchange with. Again, gold's a good analogy here. It's like if I have a lot of gold, I know I can buy it or sell it on the market with least loss in price. So
Right.
it has a lot of saleability, a lot of marketability.
It's liquid. There's demand all over the world for it.
So new investors always prefer the most liquid money.
Right.
It's a self-fulfilling prophecy, basically. It's the same reason, the argument I commonly make is the same quantifiable reasons we only have one analog gold. For those same reasons, we will only have one digital gold. And then again, if you look at those properties of money that gold best satisfied historically, divisibility, durability, recognizability, portability, scarcity, Bitcoin has essentially perfected them. It's a pure digital asset, so it's infinitely divisible. It's stored in a distributed way, so the information does not break down. This is something like the Bible, right? The Bible's outlasted empires because it's distributed information. It's infinitely portable because it's digital. You can move it at the speed of light. It's infinitely recognizable, meaning you can audit the total supply, you can run a node, you can verify the money supply. Anyone can do it anywhere for free. And then finally, it has perfect scarcity. It's the first asset in human history that we know has an absolutely fixed supply and no one can change.
Rule number 3, seek purchasing power.
We're all prone to seek out cognitive expedience. And I would say even the dollar itself, you don't want dollars per se. You don't want a definite amount of dollars. You want purchasing power.
But I don't realize it. You're right.
Yes.
But I don't realize it.
That's right. As a matter of cognitive expedience, you think in terms of dollars instead. And this is where you get deeper into what is money. Money is also a psychotechnology. It's like literacy or numeracy. It's a software implementation we put into our brain. We use it to communicate, negotiate, plan. I mean, how many times a day do you think in dollars? It's something that's deeply embedded in our cognitive machinery. And that gets into my argument later about why central banking is kind of a computer virus on the human brain. But I think what would be an appropriate avenue here is to think, okay, you've been pursuing dollars your whole life. What you're actually pursuing is what those dollars can get you. That's what money is, right? Money is the most exchangeable good. You can think of it as a call option on anything the market can produce. So any good, any service, any knowledge, human time, anything people can do, any service anyone can render for you, money is a call option on that. And that's why it's the most valuable or apex good in a marketplace. So what it ultimately means is that money is the most important form of property. So what we're all really after, all of our businesses, our lifestyles, our governments, these are property strategies, if you will. These are ways to reach consensus on property, to distribute property in an equitable way, in a way that we all determine to be fair, right? Fair and equitable. So it will probably help here we're setting up a lot of rabbit holes. We'll go into the property rabbit hole first. We typically think property is the house, the car, the stock, whatever. That's not what property is. Property is a relationship. It's an exclusively acknowledged relationship between the owner and the asset, right? The fact that you own this house and no one else can come into it. If they did, you have recourse to the government, right? The apparatus of compulsion and coercion. You can call the police force and say, hey, this guy is violating my property. Please remove him. That is the foundation of civilization. When we can go and take our most personal form of property, which is ourselves, right? And this is something we're talking offline, self-ownership. This is the foundational axiom on which all of this libertarian capitalistic philosophy is based. You own yourself. Only you can move your arm. Only you can move your leg, right? You can't even sell that property. You can't trade away your consciousness or your willpower to anyone else. You own it and it's inalienable, cannot be traded away. What you choose to do with that self-ownership, you go out into the world and you voluntarily add value to something, right? You plant a garden, you build a business, or you trade the fruits of your labor with other self-owned people. That's how we create wealth, right? That's what enables us to focus, specialize, and create wealth. So the basis of civilization is that relationship between the owner and their asset, which we call property. Money is just a reflection of the wealth in the world, right? The property that we have created through this capitalistic process. When you give one organization, right, this is all based on free market dynamics, but when you give one organization legal monopoly privileges, which is what the central bank is, to now monopolize money and control its issuance, they have a mechanism to violate the property rights of all other economic actors that are using dollars, that are denominating assets in dollars. So this is something that's so fundamental that it contradicts the premise of self-ownership when we give power away to a single institution that can arbitrarily, at a political whim, choose to violate the relationships of all economic actors using that money.
Rule number 4, observe the markets.
We've seen how Bitcoin has been reacting to inflationary pressures, where people would argue that it's not acting as a hedge right now to these inflationary pressures. So we are not that far away from, we're still, we're only mid-year, but time passes fast. We're not that far away from the year end. So I really want to understand what could be the headwinds that would take us to 300,000.
Yeah. So there's kind of two counterforces here, and we have to understand what inflation, first of all, means. It's a term that's very ambiguous.
Right.
People think price inflation, asset inflation, currency supply inflation.
Truth.
When I refer to it, I'm specifically referring to currency supply inflation. So this is arbitrary increases in, call it USM2 as your general proxy. Although those metrics have all been changed and discontinued and everything else in the wake of COVID. What's happening, in my perspective, in the world is that uncertainty is increasing more and more and more. So if we just consider that money is, one of the definitions of money is as an insurance policy on uncertainty. We see a lot of people sitting on the sidelines. This is individuals, institutions, sitting in cash, right? Banks are heavily positioned in cash right now. Everyone's expecting there to be some type of downward movement if central bank policy intervention does not keep its current pace. So at the same time, you're creating inflationary pressures on the dollar, which is that the dollar would be losing purchasing power relative to goods and services. There's this counterbalance in that there's a huge reservation demand to hold dollars, to hold the optionality that it gives you in the event we have some downward volatility in the marketplace. And that's why I think that the dollar could continue to strengthen for some time until we see some shocks like this. So in terms of the headwinds that get Bitcoin to a $307,000 mark, I actually think that should we have any deflationary shock, then people move back into the market. That could be enough to actually decrease the deflationary pressure on the dollar and put inflationary pressure on it, such that Bitcoin, the asset inflation associated with Bitcoin, resumes and we get back to a $307,000 mark. But I also think that the actual diminishing of the dollar, we're not really going to see that until kind of quarter 3, quarter 4 of this year. It typically takes about 18 months for this to wash through the system. And this really just started in March 2020, the central bank response. So I would still be looking for a, October, November shakeout of the US dollar. And I don't think much needs to happen, actually. You need to get kind of some fear out of the market, some uncertainty out of the market, some people off of the sidelines. That would help. But even if that doesn't play out, I still think that price target is in the cards for Bitcoin.
So yeah, I understand
in the next 12 months.
Also, to make sure you're actually taking action after watching this video, I've designed a special free worksheet just for this video. The worksheet will highlight all of the lessons learned in this video, as well as pull out our 3 favorite learnings and quotes that will inspire you to actually do something. The worksheet will also give you space to write down what your key takeaways are and your specific plan of action to make sure you're getting results. If you want the worksheet designed specifically for this video, absolutely for free, there's a link in the description below. Go click on it and start building the momentum in your life and your business. I'll see you there. Rule number 5, look into the future.
What do you think the future price of Bitcoin might be in 2031. But keep going into your analysis of why we have to keep jumping.
Absolutely. Yeah, there's an old saying that says it's harder to stop halfway downhill than to just not go initially. And I think that's what inflation is.
Yeah.
And this law that we mentioned, this law of accelerating issuance and depreciation related to currency, this is an ancient law. I mean, it's been written about for hundreds and hundreds of years. This is not a joke. This is not something I made up. This is something you can find everywhere, that this pattern repeats. Once countries start down this path, it's very bad, and it's inescapable. You can't turn back. So going into 2031, which, as we left off earlier, I would expect the U.S. money supply to expand from 20 trillion-ish today to about 500 trillion in the next 10 years. I expect global M2 to expand roughly 12x, from around 100 trillion to about 1,250 trillion, 1.25 quadrillion. And the difference there is that a lot of the weaker international currencies will have collapsed into the dollar. So the dollar will actually have grown in purchasing power overall. And I think by this time, so going into 2031, let's say, that Bitcoin will have continued its growth trajectory. It will have played out another one of these price cycles. Possibly its price cycle will have broken and it just gone into a long, slow grind upwards as people realize it's a game of accumulation. And I think Bitcoin by this time will have reached about 20% of global purchasing power. So this would imply Bitcoin's market cap in 2031 dollars to be about $250 trillion. So that's about 1/5 of global M2 stored in Bitcoin. Now, accounting for inflation, that means Bitcoin's market cap in today's dollars would be about 20 trillion. So in 2031 dollars, and this is a very bright line to distinguish, I think Bitcoin by the year 2031 will be north of $12.5 million per Bitcoin.
Jesus.
But
$12.5 million per coin?
$12.5 million, but adjusting for inflation, it will only feel like north of $1 million per Bitcoin in 2021 dollars, because the dollar will have lost so much of its value by then. $12.5 million will spend like $1 million. So that's my prediction for by 2031. And then that's going to clearly have some big impact on fiat currencies, including the dollar.
Rule number 6, watch out for Bitcoin.
Let's talk Wall Street acceptance, though. We saw how the price benefited when Tesla was making or took a bid on Bitcoin. And someone argued that was the correction was based on the fact that Elon Musk has retracted away from the cryptocurrency. I know in the past you've said, you don't care about Elon Musk and his opinions in regards to Bitcoin, but how important is that Wall Street acceptance towards Bitcoin here in order to get those price projections you want?
Yeah, it does require significant inflows of capital to get to that point. So I think Wall Street acceptance, quote unquote, is important, but Wall Street acceptance, in my mind, is premised on self-interest. There is this, hydraulic pressure created by central banks where they're forcing all market actors further out along the risk curve in search of yield, right? So that's why you're seeing public pensions invest in equities and junk bonds and things of this nature. So I think, and clearly today at the furthest end of the risk spectrum is Bitcoin. It's like a 70 or 80 vol asset. It's, best performing asset in history. So I think that the more, if you zoom all the way out, it's like the more fiat currency supply inflation there is in the marketplace, the more demand it will create for inflation resistant money, which is Bitcoin in a nutshell. So it's you're injecting hidden risk into other asset classes, and that pushes you as investors that have they have pensions, for instance, they have guaranteed, or defined benefit that they have to pay. They have to hit a certain return to pay out the benefits that they have promised to their pensionees. and you're going to see riskier and riskier positions taken. So I think that Bitcoin is just going to absorb a lot of that bid in the market.
Rule number 7, invest in stable assets.
All the rules in Bitcoin are optimized for holders. So there's not any design space left to introduce a value proposition that can break that network effect of Bitcoin. I mean, not a conceivable one. I mean, anything can happen, who knows? But, Bitcoin is essentially, as we touched on in the last episode, just perfected all the properties of money. And now we're talking about a $1 trillion asset. I mean, this thing, as Saylor alluded to, that when these digital networks get above 100 billion, which is 10x ago for Bitcoin, they tend to become indomitable, right? They have such an entrenched network effect. I guess you could say the brand recognition too is really important, that you can't even mention a competitive crypto asset without comparing it to Bitcoin. So Bitcoin has this kind of self-reinforcing narrative in the world. And that's ultimately what it is, right? It's an idea. The whole thing's an idea. And it runs countervailing to all of the entrenched power interests in central banks, right? They're premised on the opposite worldview, that we should just be able to expand the money supply arbitrarily at will to fix all of our problems. Bitcoin flips the whole thing on its head and says, no, we should have a firmly fixed money supply that is a sound power reservoir for the energy that we sacrifice, the time and energy we sacrifice to obtain money. The money supply should reflect the scarcity of the time and energy we sacrifice to obtain it. And this idea, I think, is just tearing, it's just breaking out throughout the world, right? Again, COVID, we have this, the sharpest liquidity collapse in market history. This was in the March 12th Black Thursday event was a faster global equities drawdown and flight to safety than the 1929 collapse. Now, so far, the repercussions of that have not been as severe. But as we know, when you just increase artificial liquidity to try to paper over these disasters, you're just delaying and exacerbating the ultimate correction to economic reality. And I think there was one headline, I think it was Jim Cramer's show, where it showed bottom of the screen, stock market all-time high, screen behind him, 40 million Americans unemployed. So the central bank model has totally diverged the market from its underlying valuation fundamentals. And now everything's become much more a product of policy than supply and demand. And, things would be pretty bleak and grim without Bitcoin right now, because it's the only thing that I guess is still rooted in supply and demand almost that you can find in the world. Everything that can't be printed right now is overpriced, right? In commercial real estate, equities, anything that's being substituted in as a store value, since the store value function of money has been totally compromised in fiat, is at a historic all-time high price point. And Bitcoin, it seems at least, although it's at an all-time high, it's really just beginning this long run to actually do what we say it was going to do, which is consume all the monetary premium in the world. And, we're a $1 trillion asset today. That store value market cap globally is probably closer to 250 trillion. So hard to believe as it may be, there's still a lot of upside in this market.
Rule number 8, look for portability.
The big hang up with gold is lack of portability, right? We talked about this a little bit earlier. You want to be able to move it across space, obviously, but gold's heavy. It's physical, right? It's very expensive to secure. It actually, in one way, it's beneficial in that you can store a lot of economic value in a small area and sort of amortize the security costs around it. But when you need to move it, that's when there's a lot of risk involved. And this was the impetus for introducing, what you alluded to earlier, were the warehousing businesses. So a private enterprise, a free market function came to be where a warehouse would take custody of the gold, give you the warehouse receipt, you can go and transact it it's as good as gold, right? You have a call option on gold effectively. This was introduced to augment the portability of gold. Well, those warehouses became banks. Those banks became central banks. And this is all, again, I'm not laying out a nefarious scheme here. This is the economics, the economies of scale associated with gold. It is more efficient to centralize custody of this heavy, bulky metal and issue abstractions in it. It's more efficient to transact in that model than it is with physical gold. So that's what drives this process. The problem is you now have to trust the custodian. You've introduced what we call counterparty risk. There's a counterparty to that trade. I can trade this paper with everyone and it's as good as gold until I go to redeem the gold from the warehouse and the gold's not there, or they won't redeem it, or a fraction of what this paper represents is available. So that is kind of the history of gold into central banking.
Rule number 9, follow certainty.
Let's zoom out now and talk about the 2030s, where you even have a bigger, much bigger, bolder call, 12.5 million for every Bitcoin. I know in the past we've spoken and you've said that's really based on the premise that you could see fiat money not existent at this point. I'd like you to elaborate on that, because is that a world of central bank digital currencies then? Like, what do you mean that we wouldn't have fiat anymore?
Yeah, so that particular price call, I think it was a 2031 price call. And I should condition it by saying it's a $12.5 million nominal Bitcoin price projection. But in today's dollars, in 2021 dollars, it would only be about feel like $1 million. So $1 million USD purchasing power Bitcoin, which essentially that implicitly means that I'm projecting the US dollar to inflate against Bitcoin 90+%. And this is based on what I look at as rate of change in currency supplies. So when I look at these things historically, there's this law of accelerating issuance and depreciation in the currency market. So we have a debt-based financial system that creates more demand for dollars than the supply can ever keep up with. So it requires exponentially more dollar production to satisfy the demand for debts that are created in a fiat system. So last year we increased, again, call it USM2 as the proxy, over 30%. The numbers are closer to 40%. Looks like 38% last year. I would expect that rate to double again by mid-decade, and then double again before the end of the decade. So we're going to be looking at over 100% year over year dollar supply increases by the end of the decade. And at this point, I think the dollar is just it's going to be a prelude to hyperinflation of the US dollar. So I would expect, and during this time, weaker national currencies would be collapsing into the dollar. So weaker economies will dollarize as they have a currency crisis. People will try to get into anything that's more stable. The dollar in its position of global reserve currency will benefit from a lot of that. But I still think Bitcoin will continue to eat most of the monetary premium. The dollar is going to absorb a lot of it, but the Bitcoin is going to be absorbing from the dollar that monetary premium as well. So I see by 2035, I would expect the US dollar to be in a hyperinflationary state.
What happens to Bitcoin if we enter a higher interest rate environment?
Higher interest rate environment, I'd say that's probably going to happen. We've already seen that central banks, they're starting to acknowledge that they're going to go above the 2% inflation target. We could get into a 1970s situation where, we have a Volcker type figure come in and try to break the back of inflation by raising interest rates. I think in that particular situation, you'll see Bitcoin just continue to do what it's been doing. I don't think that will have a lot of effects on Bitcoin. And again, as this the main thing that I'm seeing is just rate of change. So it's rate of change in the currency supply versus rate of change in the Bitcoin supply. You've got certainty in Bitcoin. You have accelerating uncertainty in fiat currencies. So again, if we go back to that original definition of money as an insurance policy on uncertainty, market actors are just going to coalesce to the most certain, most predictable money. So I don't foresee interest rate environment having a huge impact on that dynamic.
And rule number 10, the last one before some very special bonus clips, is be aware of inflation.
Today, what the real message I'm trying to get across today is we've been conditioned to think inflation is not that big of a deal. And I think when you really consider economics from first principles, you'll come to see inflation as it's a coercive, thieving, and a moral force. And it's very simply just the stealing of wealth by those who can print money from those who cannot print money. And as the old saying goes, inflation is the surest way to fertilize the rich man's field with the sweat of the poor man's brow. It's funny you brought up Gresham's law, which is a very true law that bad money chases good money out of circulation. People are smart. People save good money and they spend bad money, right? It's just it's incentives. There's another law actually related to bad money itself, and it's related to inflation. So inflation progresses according to the law of accelerating issue and depreciation.
Well, what was it again? When I'm an old guy, I'm a Biden effect here. You got to go a little slower.
The law of accelerating issuance and depreciation. So I'll work through it a little bit. And this is a law that works as surely as gravity. We've seen it happen many times throughout history. So for a monetary authority, it's typically easier to resist the first issuance or the first expansion of the money supply. But once they start engaging in inflation, the second issuance or the second expansion becomes much more difficult to resist. And by the third, fourth, and fifth, it's basically inevitable. They're just going to respond with more and more inflation. So fiat currency itself, it is actually born by borrowing. So systemically, the supply of dollars can never be sufficient to satisfy the debts that it creates. So it's incentivizing the creation of debt from the outset.
And the way the money, with them being a CPA, the reason that works is the way to get the money back is via taxation.
Yeah, and seigniorage. Frankly, they're buying government treasuries, right? The Fed's buying government treasuries, so they're paying at interest. There's never the point of the story is there's never enough dollars in the system to satisfy the debt it creates. It's a self-annihilating system.
Well, it's also Triffin's dilemma because you could never ever fix it. It would always go farther and further and further into debt.
Right. So the inflation that accelerates and gets worse over time. You can't put the toothpaste back in the tube, as you might say. And there's very simple consequences on market actors are when money holds value, people save. When money loses value, people go into debt, or if you're a corporation, you buy back your shares, or you engage in other risky activities to try and outperform inflation. So it creates this artificial hurdle rate for all market actors. And that's what we're steeped in today.
How do you evaluate kind of what we're seeing with corporations actually buying Bitcoin and putting it on their balance sheets?
Yeah, I think at a very high level, we're seeing this game theory that many Bitcoiners have long identified, as early as 2011, 12, 13, 14. We knew how the game theory of money operated. What was different about Bitcoin is that this is the first asset that kind of emerged at the retail level first before permeating these larger levels of organization. So I think that it's a really, really big deal. I mean, Saylor will probably go down. I joked with him at the opening of the show that for a company called MicroStrategy, this might be the most brilliant macro strategy ever executed. If the Bitcoin thesis continues to play out in the way that we think it will and the way that it currently is, he stands to become one of the most wealthy people in the world. And MicroStrategy stands to become one of the most successful companies in the world. And it's all a result of the game theory, or you can also think of this as the vortex of incentives that is Bitcoin, and that it basically has bootstrapped itself into existence by paying everyone to interact with it. And again, we saw this work at the individual level initially, where people could just mine it, convert electricity into Bitcoin. Then people found some value in its exchange properties. It can't be seized, it can be moved 24/7, et cetera, et cetera. So then it gained a market value. And as has been said, that was kind of the miracle event. Once Bitcoin established a market exchange value against fiat currency, that was the beginning of its monetization, essentially. Everything from that event has just been a step function of its constricting supply flow. So every 4 years it's constricting by 50%, and it's just bootstrapped itself upward. And for Saylor to make a move that bold, I mean, first of all, this guy is predisposed to understanding Bitcoin. Again, the guy that wrote the Mobile Wave, he understands network effects. He runs a business intelligence firm. He gets software. I think the last piece that he dropped in after March 2020 was just, central banking, basically, or monetary policy or Austrian economics, whatever that monetary element was that he plugged in, just sort of crystallized this worldview for him on Bitcoin. And no matter what amount of work we have done, like us Bitcoin ambassadors and talking about it, educating, writing about it, money always speaks louder than words. Actions speak louder than words. So the fact that he's now up to, the initial allocation was $500 million from his treasury. He has since taken on some very cost-effective debt. I think his first round of convertible notes, unsecured debt, was at 75 basis points. I think the latest round was at 0. So it's literally taking on free debt capital. And the reason he's able to do that is because of the optionality Bitcoin is installed on his balance sheet effectively. So credit providers are willing to lend him money at 0% or 75 basis points so that they can get the option on MicroStrategy stock, which has the Bitcoin on its balance sheet. So it serves as a proxy for an option on Bitcoin effectively. And this all points to kind of a point he's made repeatedly, is that every company now faces similar incentives. They have to decide to plug into the Bitcoin network in one way or another, either putting it on their balance sheet, or as Square is doing, they're selling Bitcoin, right, which force other corporations to adopt a similar strategy. They have to compete or die effectively. So now PayPal selling Bitcoin. I expect to see that continue. And this points to where I think fiat will just ultimately fail against Bitcoin, because so now we've seen this game theory permeate from the retail level to corporates. We now expect it in the next, say, 5 to 10 years to see it permeate at the sovereign wealth fund or the central bank level. But every market actor, whether you're an individual or you're at the other end of the spectrum, faces incentives today to borrow dollars or borrow fiat at low cost to buy Bitcoin on term debt and then pay back depreciated dollars. So this is something Pierre Rochard wrote about in 2014. It's called a speculative attack, right? When every market actor faces incentives to borrow in the weak currency, buy the strong money. I don't like calling Bitcoin a currency because it's not governmental. So buy the strong money, sell the weak money, buy the strong money, and then pay back the weak money after inflation has eroded some of that real debt burden. This is like the digital asset, or something that's going to be eating the fiat structure from all sides, and that everyone wants to now borrow and sell, basically go short dollars and long Bitcoin. And this incentive is faced by all market actors. Really starts to make you believe that this thing could all play out much more quickly than we thought.
Because you made it this far in the video, I want to celebrate you. Most people start and don't finish. Most people never actually follow through. Most people say they want something, but they don't ever do the work to actually get it. But you are different. You are special. Believe Nation, you made it here all the way to the end, and I love you. So as a special celebration, if you put a hashtag believe down in the comments below on this video, I will showcase you and celebrate you somewhere on the screen in a future video because you are awesome. If you want 10 more amazing rules from Raul Paul, check out the video right there next to me. I think you'll love it. Continue to believe, and I'll see you there.
Whether it's backed by gold or not, where government gets themselves excessively into debt and they devalue the money.